Hello, I'm John Kreitler. Welcome to This Week in the Markets. Last Friday, the Bureau of Labor Statistics, the BLS, released the January jobs report. Over 350,000 jobs were created, and there were upward revisions for November and December's report as well. This all far exceeded the market expectations. It also puts into proper perspective Chair Powell's 60 Minutes interview, as well as the press conference following the Federal Reserve's decision last week. He acknowledged in both that the 2% mandate is real and alive. He understands that the downward trajectory of inflation towards 2% is very favorable. However, he also acknowledges it's not at 2%. He talked about the strong economy, jobs being created, and low unemployment rate. He'd like to see a little bit more time, a little more data before they would look to cut rates. He did not want to repeat the mistakes of the 1970s where inflation was going down. The Federal Reserve cut rates too soon and inflation spiked up again. For its part, the stock market indexes went to all-time highs based off Chair Powell's interview, as well as corporate earnings and the robust jobs report. The yield curve stays inverted, with the 2-year around 4.35% and the 10-year at 4.1%. One thing I'm keeping my eye on is global commodity prices. Many times these commodities are based off of China and its GDP and economic activity. It has been in a slow grind downward, China, and that is reflected in most global commodity prices. If they were to have some fiscal stimulus by the government and there was a rebound of their economy, that would ignite some upward pressure on global commodity prices and therefore possibly inflation. Again, something that the Federal Reserve and Chair Powell, I'm sure, is looking at. I'm John Kreitler. This was This Week in the Markets. Have a great week.